Hey, welcome back to XRP Future Finance. Let me ask you something right off the bat. If someone told you that institutional investors have been buying into XRP every single week for 2 months straight, what would you expect to happen to the price? You'd expect it to go up, right? Or at least hold steady. Well, that's exactly what's been happening. 8 consecutive weeks of ETF inflows, and XRP recently fell to one of its lowest levels of the year. Money keeps coming in, and the price keeps falling. That disconnect is exactly what we're breaking down today, because understanding why this is happening tells you something really important about where XRP actually stands right now, and what would genuinely need to change for that picture to shift. The inflow streak is real, and it stands out in a market full of outflows. Here's what makes this story worth your time. While Bitcoin ETFs have been bleeding cash at a record pace this year, and while most altcoin funds have been losing investors left and right, XRP spot ETFs have quietly been doing the opposite. 8 straight weeks of net inflows, as of June 26th. Since these funds launched back in November 2025, more than $1.47 billion has accumulated. XRP also crossed the billion-dollar milestone faster than any crypto asset since Ethereum, and if you know anything about how slowly institutional money usually moves, that's genuinely notable. The institutions buying these ETFs aren't panic selling during the dip, they're still showing up. On top of that, the amount of XRP sitting on exchanges has dropped to a 7-year low, down about half since last October. Coins leaving exchanges usually means they're moving to cold storage, which typically signals that holders aren't planning to sell anytime soon. So you've got consistent buying, and you've got holders not selling, and yet the price is still going down. That's the part that deserves a real explanation. Here's the actual reason the price isn't responding, and it's simpler than you think. People see 8 weeks of inflows and picture big institutional money flooding in. But here's what nobody's putting in the headline. The actual dollar amounts behind this streak are pretty small. The week ending June 18th brought in around $10 million. Even the strongest week of the entire streak, ending June 26th, was only about $23 million. Now XRP's market cap is sitting around $65 billion. Running $23 million into a $65 billion market isn't going to move anything. The market barely registers it. And the trend is actually moving in the wrong direction. Back in May, XRP's ETFs pulled in $132 million for the entire month. So far in June, that number has fallen to roughly $47 million, about a third of May's pace. The streak is technically still alive, but the buying power behind it has shrunk considerably. Consistency without volume is just a pattern. It isn't a price catalyst. The fund's total holdings actually shrank despite fresh money coming in. This is where it gets really telling. During the week ending June 26th, even with fresh inflows arriving, the total dollar value held inside XRP's ETF funds dropped, from around $995 million down to about $934 million. New money came in, and the funds still got smaller in total value. That happens when the asset's price falls faster than the inflows can keep up with. So the funds aren't just failing to push the price higher, they're losing ground in real dollar terms, even while people are actively buying. That shows just how much weight the broader market is throwing around right now. The inflows are real, but they're being outpaced by a market moving hard in the other direction. There's also a supply factor that most people gloss over. On top of the small inflow numbers, there's a supply dynamic working against XRP every single month that doesn't get nearly enough attention. On June 1st, Ripple released 1 billion XRP from escrow, part of an automated monthly unlock that's been running since 2017. Most of it gets relocked into future tranches, but a meaningful portion reaches the open market each month. That monthly slice of new supply is larger than what a full week of ETF inflows is currently bringing in. So the ETFs aren't buying into a stable market, they're absorbing fresh XRP entering circulation on a fixed schedule, while the broader market is simultaneously in a downtrend. The buying would need to scale up considerably just to keep pace with supply, let alone push the price meaningfully higher. XRP recently fell to one of its lowest levels this year, and the context matters. On June 25th, XRP dropped to around $1.03, one of its lowest points during this entire correction. The last time XRP was consistently at this level was November 2024, but that was a very different situation. Back then, XRP was coming off $0.50 in early November and just starting to move upward. It reached 2.70 by early December. The difference now is that XRP is arriving near this price from the downside, after falling from a high of $3.65 that it reached in mid-2025, when its legal battle over regulatory classification was finally approaching resolution. That was a moment when a lot of positive developments landed at once: the SEC case winding down, ETF launches, regulatory reclassification. The price reflected all of that optimism simultaneously. What's happened since is a slow, grinding reset, even as the fundamental news around Ripple's network has continued to improve. The whole market is under pressure, and that context is important. To be fair about what's happening, XRP isn't falling on its own. Bitcoin dropped below $58,200 on June 25th, a level it hadn't visited since September 2024. When Bitcoin moves that hard to the downside, virtually everything in crypto follows. XRP is down about 20% over the past month, which tracks closely with Bitcoin's drawdown over the same time frame. This isn't necessarily a signal that something specific broke for XRP. It reflects a sector-wide environment where even improving fundamentals don't protect prices from the broader macro tide going out. What makes XRP's situation particularly worth watching is that this decline is happening while the surrounding story, regulatory clarity, ETF inflows, network growth, has actually been getting better. That gap between the narrative and the price action is what makes this moment genuinely interesting. Is the streak actually meaningful or just a talking point? Here's an honest take. 8 weeks of continuous buying through a significant market decline is real data. It tells you that whoever is behind these ETF purchases isn't flinching at lower prices. That's the behavior of a long-term buyer, not a short-term trader. And the declining exchange supply reinforces that picture from a different angle. Coins are leaving the market and going into storage rather than being sold. Taken together, those two things are consistent with a picture of quiet accumulation building beneath the surface. But accumulation doesn't guarantee a price reversal on any particular timeline. Prices can keep moving lower while institutions continue building positions. The accumulation only becomes a meaningful price catalyst when the buying gets large enough to actually absorb consistent sell pressure. And right now, the weekly numbers aren't anywhere close to that threshold. What would actually need to change for this streak to matter for the price? The dollar amounts need to grow significantly. A rough benchmark that analysts use for serious institutional commitment in a large-cap crypto is monthly inflows above $300 million. June's current total of roughly $47 million is well below that. For the streak to stop being a background signal and start functioning as a price driver, weekly inflow numbers would need to climb consistently into a different range entirely. One scenario that some analysts discuss is a major asset manager entering the XRP ETF space, the kind of name that would bring a completely different category of institutional money into the picture. It's worth being clear, though, there has been no confirmation that any firm at that scale plans to launch an XRP ETF product. That remains speculation at this point. Another potential factor is legislative. The Clarity Act, which would permanently classify XRP as a commodity and give large institutions the regulatory certainty they currently lack. That bill has a tight window before Congress breaks for summer, so its path forward is genuinely uncertain. What some analysts believe XRP could reach by 2030, and what those forecasts actually rest on. Standard Chartered's analyst Jeffrey Kendrick has maintained a $28 price target for XRP by 2030, even as the market moved against him. He did reduce his end of 2025 target from $8 down to $2.80 earlier this year, but the 2030 figure stayed in place. A $28 XRP would imply a market cap of around $1.7 trillion, a level only Bitcoin has ever reached. Bitwise ran their own formal valuation model and arrived at a range between $29.32 at the high end and just 13 cents at the low end. That's an enormous spread, and the single variable driving that gap is worth understanding clearly. Every serious XRP price forecast ultimately rests on the same question. Does XRP, the token, actually capture the payment volume that Ripple's network is generating? Some analysts believe it will. Others believe the token could become useful infrastructure that institutions operate around without needing to hold. And right now, Ripple's own stablecoin is providing real-world evidence for the more cautious case. Voice. RLUSD is quietly doing what XRP was supposed to do, and that's a genuine uncertainty. This is the subplot that deserves far more attention than it currently gets. Ripple's RLUSD stablecoin has grown to around $800 million on the XRP Ledger, and the pool pairing RLUSD with XRP is now the second largest liquidity pool on the entire chain. Network activity on the XRP Ledger is climbing toward record highs. Liquidity in its trading pools has more than tripled this year, and very little of that growth has shown up in XRP's price because the money is flowing into RLUSD, not XRP. The original design logic for XRP was that it would serve as a bridge asset, bought for a few seconds to move value across borders, then sold on the other side, creating constant demand pressure. But when RLUSD is available as an alternative, institutions have a straightforward reason to use the stablecoin instead. It doesn't move against them mid-transaction. Around 82% of RLUSD's supply is held by just 10 addresses, which means it's largely institutions and trading desks already using it in practice. That's the category of demand that was supposed to flow to XRP. Right now it's going to RLUSD instead, and that remains the biggest open question hanging over any long-term XRP price forecast. The tailwinds are real and worth taking seriously. That said, there are genuine structural developments around XRP that are worth following honestly, not just as narrative but as actual data. XRP ETFs have cleared $1.47 billion in inflows since launch, and if monthly figures scale back toward what analysts are projecting, the demand dynamic starts to look different. The XRP Ledger has been winning real tokenization business, pulling in roughly $1.9 billion in tokenized assets over just 3 months, a figure that reportedly outpaced Ethereum during the same period. That's a competitive result that rarely gets the attention it probably should. XRP has also been reclassified as a digital commodity in the US, clearing a legal cloud that had discouraged many institutional participants for years. These are structural developments, not just talking points. They may not have moved the price yet, but they are changing the environment in which XRP operates going forward. Voice. The supply picture is something every XRP holder should understand clearly. Here's a data point that tends to get skipped in bullish XRP content. Only about 62 billion of the eventual 100 billion total XRP supply is in circulation today. Ripple still holds around 33 billion tokens in escrow, releasing roughly a billion every month on a fixed schedule. The market has been absorbing these releases for years, so it isn't a new development, but it is a constant one. The fully diluted market value, what XRP would be worth if all 100 billion tokens were circulating at today's price, already runs to around $102 billion, against a current market cap closer to $63 billion. Every XRP price forecast is essentially a bet that demand growth outpaces the ongoing expansion of circulating supply over the coming years. That math matters when evaluating any price target, especially the higher-end ones. Voice. Where XRP actually stands and what may help determine where it goes. Here's the honest bottom line. 8 consecutive weeks of ETF inflows during a market sell-off is meaningful. It tells you that institutional buyers haven't walked away from XRP at these prices, and the declining exchange supply points in the same direction. But the week count of the streak isn't the number worth obsessing over. The dollars flowing in per week are what matter, and those numbers are currently too small to shift the price of a $65 billion asset moving against a sector-wide downtrend, with monthly supply releases adding to the pressure. What may help determine XRP's trajectory from here, whether monthly inflow numbers start climbing back toward and beyond May's pace, whether the Clarity Act advances before the legislative window closes, whether the growth happening on the XRP Ledger eventually starts pulling real demand back into the token itself rather than flowing primarily into RLUSD, and whether the broader crypto market finds its footing. None of those outcomes are guaranteed, but they're the actual variables worth tracking, not the headline week count of a streak that, on its own, shows you who's buying without telling you where the price is going next. We'll be following all of it right here on XRP Future Finance. Make sure you're subscribed with notifications on, and we'll see you in the next one.